Hey traders, in this video, I'm going to be walking you through just a bit of a market update on what the indices are doing right now. Dow Jones, S&P 500. I'm also going to be covering silver and gold and some of the silver and gold stocks as well too. I'm also going to be covering one bank stock that I talked about a few weeks ago that has been rocketing and where I think it's likely to go. Also, I'm going to be mentioning and helping you out with, I'm going to give you one powerful chart reading and also trading technique to really help you out with your trading. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, over the last 15 years, we've tested 64 different trading courses and we have put the most powerful systems and trading techniques that we've discovered in this brand new trading course. And for a limited time, I'm giving away free access. So go to johnsfreegift.com. That's johnsfreegift.com or click on the very first link in the description to get free access to this brand new trading course right now. Alrighty guys, so let's get straight into the S&P indices, and we're going to go through a bit of an indice market update first. Now, by looking at the S&P 500, we can see that it's actually broken out to all-time new highs. But it's not a strong break, is it? We can see of this last couple of months, if I just erase everything off the screen here, we can still see, right, that the last couple of months we've been in this bit of a bullish channel through here. And as you can see, right, like this bit of a bullish channel, and if I go from there to there, and if I bring that up from there to there, you know, we're still in this pretty bullish channel through here where we've broken up to new highs, but it's not a very strong breakout. We're not getting lots of volume behind it. That's the S&P. If I go to the SPY to try and get a bit more volume, look at the volume. The volume is very little, right? There's no volume behind this breakout. It's not a large breakout. It's not a big breakout. So back to the S&P 500 here, we can see that through there, right? So it's really interesting to see that we're getting a break to the upside, but it's an all-time new high break to the upside. And as we can see, right, that it's just no volume here. So it'd be really interesting to see, are we creating some sort of a false breakout? Now, I'm not saying that, right? The trend is your friend. You want to trade with the trend. But it's really interesting to see what's going on here right now when it comes to the S&P 500. It'll be really interesting to see whether if we do sort of stop here and reverse back down, then that's probably going to tell us that this is a bit of a false breakout. Because look at the Dow Jones here for a minute. We see the Dow Jones is not even at all-time new highs yet. So again, it's really interesting. Not really a lot of volume coming into here on the Dow Jones. Now, if we go to the Nasdaq, the Nasdaq has indeed had a bit of a gap up. Let me just erase everything off the screen here for a minute. Right, we definitely do have some sort of a trend line coming up through here right now, as we can see. Right, so there's a bit of a support coming up through there to there. Probably something going on through there. So a bit of a support coming up through here, and then we had a big sort of up candle last on Friday, and now we're broken up, but we're not at all-time new highs yet. As you can see, right, it sort of just gapped up a little bit today and then hit the resistance level there. So it's going to be really interesting to see whether we do follow through or not. If I go to the QQQ to see if there was a bit of volume there, and again, look, even on the QQQs, which is the Nasdaq ETF structure or ETF, no volume here, right? There's absolutely no volume coming into this. So really interesting. I also think if I just go to excuse me. I also think, just from memory, that if I go to the calendar, I'm just looking at the other screen here right now. So yeah, so FOMC is on this Wednesday as well too. So that's going to be interesting to see whether we do what happens with that as well too. So so that's what we're seeing there right now, guys. And it's really interesting to see that we're popping up right now. And we're probably going to get another drop in the interest rates. Now, it's going to be, again, it's really interesting to see what's happening here. We're getting a break, but not on volume. So really interesting. Moving on now to silver and gold. We're going to start off with the silver market first. But what's happened with the silver market? We're just pretty much, if I go back to obviously the last 3 months, we can see the last 3 months, once again, we had this bit of a channel coming down through to here. Now that's broken. We do have a bit of resistance going on through to there. Again, it's not really showing much going on through here. We did have a bit of support and resistance going on through here as well. So that's where we are. So we are starting to slowly break up out of this here, but there's not a lot of strength behind it. It's not a lot of, yes, this is a definite move. Now that weekly chart is having a nice pullback. So we're definitely seeing that we're getting that through there. Looking at now to gold, and once again, just looking at this gold market through here, it's really interesting to see what's really going on through here. So we can see that this trend line coming down through to here. I'd say that'll be the trend line for me, that one through there. And as you can see, right, we're coming up and we're squeezing up into this sort of triangle pattern. This is on the short term anyway, guys, the short term. The long term, we're actually getting a bit of a pullback through here as well too. So long term has been quite nicely to the upside. So even if we did get a bit of a flush down, it's probably likely to be short-lived anyway. Even if we did get a bit of flush down, it's probably flushing out the longs, getting people short, and then suddenly they completely reverse. So it'll be really interesting. If I go to the GLD, we can see there hasn't been much sort of price going on. Much going on with the actual price there on the GLD, and the volume's really, really low, and same for the SILJ. So I'm pretty sure that they're probably waiting for the volume to come in as well. Looking at now to the actual gold stocks, we go to the actual GDX itself. We can see that still had a lot of support through here, where the market popped out, and now we're coming back down towards this sort of underlying channel. You can see how it actually is resting right on that channel right now. So it'll be really interesting to see what happens through there. On the GDX, we can see a nice pullback through here on that weekly chart. Very nice sort of trending moving average as well too. So that tells me we should start to see a bit more upside out of this as well too, but obviously anything can happen through there. Now looking at, and I'll have a look at the SIL as well too. So the SIL through here. Okay, so SIL, same sort of thing. We're getting a bit of a basing pattern through here where it's just sort of gone sideways. We're still trying to run up through here. We had a bit of a pullback today, but very, very, very low volume. Not really much going on through there. Very low volume that's happening on the short term there. So looking at now, guys, one thing that if you one stock that I talked about a few weeks ago, if you remember, was JP Morgan, and I talked about how JP Morgan should start to see a bit of a rise. I actually mentioned the weekly chart was the main thing here. How the weekly chart started to create, and this is where a lot of people, they say that you can't really trade the chart because the chart's manipulated and all that sort of stuff. And if you just look at this here, right, what's this here? High, double top, double bottom. What's this here? It's a higher high, higher low, up bar, buyers in control right here, and we've actually seen a nice rise. And so we should actually end up going to the upside around that 130 level on the upside there. That's where JP Morgan looks like it's probably going to try and run to. And so if we go to that daily chart, once again, you can see how we're nicely rising through there. So it's definitely not guaranteed to get to 130, but we definitely did get the rise out of it, like I thought we'll go into on JP Morgan. So it's really interesting to see what's going on through there and what's going to happen on there as well too, and what's going on through there. So really nice move in JP Morgan. The one thing that I want to help you out with, which is a chart reading trading technique, is simply this, okay? I'm going to bring up PYPL here for a minute. Okay, PYPL. And one thing I'm going to tell you, bring up the screen here. I'm going to delete this. I'm going to delete this chart here. And one thing these markets have, right, they have memory. And people, again, what I said before, people have this thought that there is no way you can trade the chart. There's no way you can look at the charts. There's no way the market's manipulating, all that sort of stuff. But the market continues to have long-term memory of lines. And I don't know how that works. I don't know why. It just does. So as you can see here, right, like if you look at PayPal, why did PayPal bounce off this 95 level? Well, because there wasn't really any support level there. Why did it bounce off this 95 level? Well, if we squeeze our chart up, right, you can see we squeeze our chart right up. We can see that if we start our trend line from the bottom here, and all we're going to do is we're going to connect all the low points. You can see how it actually bounced there, bounced there, bounced there, and then ran up. It came all the way down. Look where it actually bounced. Right at that level, because that was the level there, right? So this is called a valid trend line. So you look at the weekly chart. When you squeeze your weekly chart up over many years, you can start to see what's going on through here, right? Support, came down, support 3 times through here, 2018, and then took off. Now it's come back down through here, right? And as you can see, look where it came down to, bounced right off there. Now, if you didn't have that long-term trend line in place when you're trading or even reading the charts, you wouldn't know. You would think, oh, PayPal's likely to drop, PayPal's likely to go down. But you'd see on that weekly chart, right, that hang on, this is just a bit of a pullback before we're likely to rise through there. So if you look at something like MCD, McDonald's, right, look what's happening in McDonald's. McDonald's what? McDonald's is starting to have a bit of a pullback. But if you go to that weekly chart, squeeze up through here, look what's happening through that was a head and shoulder formation, or it wasn't a reversal head and shoulder, wasn't a reversal head and shoulder formation. This here is more like a continuation head and shoulder formation. So we're looking at that through there, right? We're seeing this market rise, and this market's had a low, then this market's come up, and now we're having a bit of a pullback through here. So I would say that McDonald's is probably likely to find a bit of support around this level here. Why? Because this is the long-term support level coming into play. So even if we do get a bit more of a drop on McDonald's through here, let me squeeze my chart a bit more. Yeah, we're probably likely to get a bit of support around here before we start to maybe even have a bit more of a rise. Now we are getting a bit of a nice drop into the downside, but I wouldn't be too surprised to see this market actually have a bit of a drop out of that there. So I hope that makes sense for you guys. The last thing that I want to mention on today's video is with your trading. I'll talk about this. I did a coaching call this morning with my private clients. Okay, so every single week I do a live coaching call where I talk about my trades, I talk about the losses, the lessons that I'm learning or relearning. The trades that I'm in right now and all that sort of stuff, right? I do that every single week with all my private clients, and they all log into a group, and they see my charts, and then at the end I turn their microphone on and we have a good conversation, we have a good chat. Okay, I answer their questions and so on and so forth. And the interesting thing that when looking at the markets, okay, when looking at the trading, I was speaking to one of my private clients today, and today there was actually two quite nice setups, right? There's two really nice setups that appeared on the charts, and so I entered. I'm already in one good trade, but there was another two nice setups that appeared on the daily chart, so I got in today. And I'm probably likely to hold these anywhere from 2 to 5 days, maybe even longer, depending on how these things plan out, right? So they're the type of trades. And I was speaking to one of my private clients today, and because obviously I'm coaching them every single day via the Facebook group, the private Facebook group, and every single week I'm coaching them as well too. And he said to me, he goes, "Oh, I took this first setup because I liked it, but the second setup I wasn't too quite sure, so I didn't take it." And I said to him, it's so important that you take that right or wrong out of the window, right? Because we never really know. In the depths of it, if you have a really good trading system, every single system comes with a win-loss ratio, right? Whether it's a 50-50 win-loss ratio or even a 90% win-loss ratio. Some trades you get into are just not going to work out. They're going to be losses. But you can never know, no matter how good of a setup that the setup looks like, right? No matter how good of a setup that setup is, you never know whether that's going to be a profitable trade or the trade that you're not sure about runs on. And I've done that so many times where I would take the trade because it looked better, and the trade that I was uncertain about, I wouldn't take that. Guess what happened? The trade that I did take, it might have made a small profit or a small loss, but the trade I didn't take ran on for big profit. And that happened time and time again, right? Picking and choosing, trying to be right with the market. And then I said to one of my private clients today, I said, listen, I said, you're trying to be right with the markets. I said, I took both these trades today. I said, I don't know whether both these trades are going to be losses or both these trades are going to be profits, or one's going to be profit. I said, I don't know. I don't need to know. I just know I'm doing my job and trading it, not bringing my emotions or trying to be right with the markets. Because every time I try to be right with the markets, guess what? I'm now picking and choosing. Even though the system says take these trades, I'm picking and I'm choosing the ones that I think are going to make a profit, right? But there's that thing, right? Now you're skewing the odds because you never know. You never know what trade's going to make a profit, what trade's going to make a loss, and what trade's going to make a big profit, right? Because I have either a loss, a small profit, or either big profit, right? So I never know. I can never ever know up front. I don't need to know. All I know is that when I do take these setups, most of these setups are going to run on for a nice profit. So my job is just to take them, have good risk management in place. So if it is a loss, my count is only down a few percent overall. I can handle that and I can continue moving on knowing that I still have 97% or 98% of my capital there 97, 96% of my capital still there, right? Still good to go to continue moving forward. Makes sense? So whenever you're trading system, that whole right and wrong with the markets is very, very, very bad, right? It's an emotional thing. It's like, well, I picked this one because I think it's going to be right, and I didn't do this one, even though it met the rules, because I wasn't sure. Well, if it meets the rules, your job is just to take the trade, but then manage it as it goes, right? Have good risk management, take the trades, not trying to be right or wrong with these trades, and then continue moving forward. Because at the end of the day, once again, guys, you never know up front with your trading system. You can never know which trade's going to generate a good profit, which trade's going to be a loss. But by you picking and choosing, I guarantee you Murphy's Law says the one that you don't pick because you think it's not going to be a good profit, that's the one that runs on for profit, and the one you do pick ends up being a loss. But if you got into both those trades, like say, for example, my private client did, but I could have one loss, one profit, but I definitely know that if that's the case, I'm still going to be up. Because one of the trades might be a loss or maybe a 30 or 40% loss on the option, right? That's not on the entire account, that's on the option. But then if the next trade is a profit, I guarantee it's probably likely to be double that one I lost. I'm still up. Makes sense? And now the better thing, right, is they both run on for profits, and then I'm doing well. Makes sense? But even if the worst case scenario is both of these trades are a losing trade, my account is only down around 5 or so %. I'm still good to go. But if they're profits, and especially if they're big profits, my account can be up 5, 10, 15, 20%, especially if they start to move quite nicely. Makes sense? So that whole right and wrong attitude is not really good, and especially with my private clients. And I tell them, listen, you've got a really good high quality system here. You definitely don't know which one's going to be right. So have good trade management, have good risk management, meaning the amount of money you risk in there, and then just see what happens. You know what I mean? Like, just go with it, and you'll guarantee when you stop picking and choosing, but you just go with the system because that's the system you've chosen to trade, you'll find over the long run you're likely to do quite well. Make sense? So guys, if you're interested in joining my private coaching group, where you get my #1 trading strategy, and you also get me as your coaching, and so on and so forth. Get weekly coaching and daily coaching on the Facebook group as well too. You see my trades and so on and so forth. If you'd like to get access to that, I'm actually running a 75% off sale right now for one person only. So if you're interested in that, then email me at Howell, HOWELL trader @gmail.com, howtrader@gmail.com. I'll email you all the details, but it's only for one person only. If you're interested in that, then email me at howtrader@gmail.com and I'll let you know. Amongst all that, guys, even if you don't join my coaching program or do anything there, I hope you can see that some of the foundational things that's going to help you do well is the mindset. And that mindset is, don't try to be right with the markets, because right and wrong doesn't exist in the markets. It's just your pattern. You take it. Some are losing trades and some are profitable trades. But if you pick and choose, I guarantee you Murphy Law says that the ones you pick are likely to be losses. The one you don't get into are likely to be profits. But if you didn't pick and choose, even though you had the losses, the profits will take care of itself. And before you know it, your account's growing and growing and growing. But again, you never know up front. Your job is to find the pattern, trade the pattern, and then have good risk management and good trade management to manage the losses, to keep the losses small and let those profits run. Hey traders, John Howell here. Thanks for watching my video. For a limited time only, I am giving away free access to my brand new trading course. I've put all my most powerful systems, strategies, and trading techniques that I've learned over the last 15 years and put it in this course, and I'm giving it away for free for a limited time. See, in this brand new Guide to the Markets by the Board trading course, and you can get it when you go to johnsfreegift.com, you're going to learn, firstly, you're going to get access to a brand new training course for 90 minutes, and you're going to learn all the details step by step to my #1 trading system with over a 90% success rate that works on any market and any time frame. You're also going to learn 3 powerful chart reading and trading techniques. You're also going to learn 2 more powerful trading systems, and also you're going to learn 7-figure trading secrets, mindset techniques, and so much more. There's top 13 mistakes you're going to learn, the 10K per month formula, and so much more. No, this is not a get rich quick scheme, but if you are struggling with your trading right now and you need help, then for a limited time, you can get free access to this. So Go to johnsfreegift.com right now or click on the very first thing in the description because for a limited time, I'm giving away. So go to johnsfreegift.com right now and start getting access to this full complete trading course plus also the free training with my #1 trading system with over 90% success rate. Go do that right now and I'll see you on the next page.